Hi Santa Barbara, Daniel Zia here with Zia Group and eXp Realty on the Central Coast, and I'm delivering our October South Santa Barbara County real estate market update. This is the October market update going over the end of September 2024 statistics. I'm going to dive right in. First thing that you're seeing right now with interest rates is interest rates have been fluctuating the last few months. The Fed dropped the Fed rate, which built some excitement of the market, but the lenders had already kind of priced in what they were anticipating was going to happen. So interest rates went down, but they really went down in anticipation of that event. And then later on, weeks later, we had some economic data come out that was more positive than expected, which actually tapered off the expectation that the Fed was going to be as aggressive in those future rate drops, which means they start pricing the market differently, the lenders do, and rates kind of ticked back up. So we're hovering, mid sixes plus or minus 0.25%, depending on the loan offering and the lender you're working with. But the interest rates are kind of right in that range right now. As far as what the market is doing, we've got new listings, homes going into escrow, homes closing escrow, and the median sales price and average sales prices all up for the year. So it's definitely a stronger real estate market than last year, but not nearly as strong as 2022. Now, the market did go down last year. The home prices kind of tapered downward from the peak of the market in 2022. I would say big news for this time of the year is we're actually back to those peak 2022 prices when you look at kind of median home price. So we're back up to kind of the highest prices that real estate has ever been, though the market is very different today than it was in 2022. So 2022 is still defined, at least in my opinion, as the best historical seller's market that we've ever had. And we have more of what I would term a balanced market, still slightly a seller's market over a buyer's market. And home prices are going up, I would say, gently in the statistics. But it's really interesting, depending on the niche of the market and the property, we aren't really feeling an appreciating market because I think a lot of us still have these 2022 peak prices in our mind. And the market went down gently last year and then it's gone up gently. So it feels like the last couple of years, as if you average it out, has felt more, let's say, flat. But the best listing agents right now and the most wise sellers are still pricing their homes with a little bit of edge to the asking price to be a little bit below where they think they need to be. And they're seeing really good sales outcomes. We're still seeing multiple offers in those situations, some really nice sales prices, attractive terms for sellers. And then the sellers that are pricing a little bit below where we think the market should be, above where the market should be, even a little bit, the market's really pretty unforgiving right now. So that's really interesting. I think it's one of the more unforgiving markets that I've seen in almost 20 years from that perspective. If you don't price your home right from the get-go, for some reason the buyers are really ungracious about that, and it can be one or more price reductions to get them back, and then the negotiation is much, much tougher. So as far as kind of where we are at the absorption rate, that's how many weeks or months of inventory we have to sell at the current pace of sales. We have about 3 months of inventory on the affordable market and about 8 months of inventory on the luxury market. That's been gently creeping up this year, which is really interesting because prices have been creeping up, and normally that's not the case. Usually absorption rate is coming down, which is stimulating prices to go up. So it's kind of an interesting dichotomy at this moment. Median sales prices, when you look year over year, this end of September to last end of September, you get the median sales price up 5%. You got the average sales price up 10%. Again, we're not fully seeing that kind of case by case, but that's what the market has done as a whole. Good luxury activity right now in the luxury market. We've got 15 sales last month over $5 million, and they're taking about an average of 2.5 months to sell. Average pace of a affordable home is kind of more like a month, so it's about 2.5 times the affordable home, which is pretty standard in our market. We typically see that kind of delta between the luxury market and the affordable market. Now that said, even though there was lots of sales activity last year, I think the predominant reason why there was more sales activity in the luxury market is simply a matter of more selection. We have about twice as many homes for sale now as we did last year in the luxury market. And so when you have more available homes, buyers that are looking in that price category, there's just a greater chance that they connect with one of those homes and want to move forward with an offer. So it's not necessarily that the economics are stronger this year over last year, and that's why there's more sales. It's just, I think, more selection, and buyers are capitalizing on that selection and buying more homes as a result. Average sales price is right in that 3.6 million range for the month, and the median sales price in that 2.5 million range. Again, that's a monthly stat versus a year-to-date stat, so I always take that with a grain of salt because that moves up and down on a regular basis. Prices right now are seeing a discount of about 3% from their last listing price in negotiation as on an average in the market, and about 5% below their original listing price. Now that said, again, if you're pricing your home well to the get-go, you might sell it at or above asking price. So that's kind of where you're averaging out. The sellers are taking that strategy versus pricing high and having to reduce down later or negotiate later. So overall, that's a very similar discount compared to last September in 2023. As far as what we're seeing, kind of inventory overall, market-wide, well, we're seeing a lot more inventory on the luxury side of it. When you average that out with the affordable market, we're only seeing 18% more active listings versus last year. And so we've seen 12% more homes go into escrow. And again, on the affordable market too, I think it's usually a pretty comparable range, how many additional homes we have to sell and what the number of sales does, because more homes to sell means more buyers are choosing homes to buy and getting excited about certain homes going into escrow. Lots of different price ranges are seeing kind of boosts in activity. I think a really active one right now is that like sub $2 million for a single family home, especially that $1.4 to $1.8 million range. You know, that was selling more like 2 and 3 weeks averages versus your 30-day average compared to other kind of affordable price ranges there in Santa Barbara. Let's see, we talked a little bit about the luxury market. We saw a great, again, we're seeing really the ultra high net worth or the ultra luxury markets where we're seeing a lot of really significant activity compared to previous years. 771 Garden Lane, sold for $28.4 million. So that was the highest sale for the month. And that's one more $20+ million sale for the year. And that's really, it's been a very, a strong, 10 plus, 15 plus, 20 million plus ultra high net worth, ultra luxury market kind of sales activity. And the highest priced luxury condo, this one is wild, $7 million for a condo at 109 Olive Mill Road. So that's either record breaking or pretty close to it in our area, $7 million. So a great job for that seller and showing that, hey, for the right product, someone's willing to pay that for a condo. And that's not even oceanfront. That's on Olive Mill Road, so right there on Coast Village Road there. So median sales price in the luxury market coming in at $6.4 million. And then we'll just end here with the condos. Condo market has been, I would say, active and consistent. Condos are selling a little bit closer to their asking price, 3% off of their asking price, including the original asking price. Selling a little bit quicker than a single family home, 3 weeks on the market versus, again, plus or minus a month. And we've seen, I'd say, less activity than last year and slightly longer days on market compared to this time last year. But again, pretty consistent. And this condo market has really been tried and true. And we didn't see that little dip in condo prices in 2023. We've just seen more incremental appreciation every year the last number of years. So it's been more linear rather than a little bit of this up and down graph that we've seen in the affordable single family home market and the luxury estate market. So there you have it. I hope that's helpful. As always, real estate is highly contextual, meaning it's very, very local, and your situation is going to be very different than your neighbors. We're always happy to do a private, confidential, in-person or Zoom or phone consultation with you and help put what we're seeing locally into an either hyper-specific context for your specific situation and make some recommendations on strategies to either buy or sell depending on your situation. So reach out to your preferred Ziegler partner, and we're happy to help. Until next time, have a great Halloween, and we'll catch you later.